solving the numericals, okay, past year questions. So we will solve 2 more questions that appeared in past year numericals, and then we will move on to next topic. I'm audible, right? Yeah. So next question is question 2, that derive deposit multiplier and complete money multiplier full stop. What are the changes in deposits, currency holdings, and money stock if RBI purchases rupees 1 lakh worth of government securities, GOVT, short form for government securities, from open market. When RR is 10%, desired excess %, desired currency to deposit ratio is 2.5%. Do it. Try it out, everyone. Yes, guys, answer. What are you saying? Wrong. Jyotika. No. Sakshi. Wrong. I am solving, guys. I don't know what you people are doing. We need to find deposit multiplier and money multiplier. Okay. And we also need to find changes in deposit, that is delta D, changes in currency holding, and changes in money stock. And they are saying RBI is purchasing. If RBI is purchasing, then money is going to go to the government. And if money will go to the government, that means money will be there in the economy. Money in the economy means money, delta MB is going to increase. It will be positive. Yes or no? पानी ले आइए. मैं बॉटल का नहीं पीता, ग्लास में ले आइए धो के. Right. So, first of all, deposit multiplier. So monetary base, acha. Monetary base is given to us. We do not need to find it. Monetary base, delta monetary base is given to us. It is plus 1 lakh because money is increasing in the economy. So deposit multiplier, direct formula 1 upon CD plus RR plus ED. All these are given in percentage. See, RR, CD, ED, everything is in percentage. So convert it. So 1 upon 0.5, 1 upon 0.1 plus 1 upon 0.5 plus 0.25. Right. When you will solve it, it will come out as 2.5. Now, I don't know what mistake you people were doing. It was very direct. 0.05. Huh? 0.05. 0.3. Yeah. Yes, Sakshi and Jyotika. You, Sakshi, what mistake you did? How come you were getting the answer as 10? Simple calculation it was. Anyway, so that's your deposit multiplier. Now they are asking complete money multiplier. And complete money multiplier is given by the formula CD plus 1 upon CD plus RR plus ED. It will be CD is 2.5 upon 100 plus 1 upon 2.5 upon 100. Sakshi, please do something with your mic. Look here. Some calculation they are saying. It is given as Acha. Oh, that's why they are saying. Sorry, guys. It is not 2.5. It is 25%. Okay. Now, so it will be 0.25. Fine. 0.25 plus 1 upon 0.25 plus RR. 0.1 plus ED. Huh? Now is it fine, Sakshi and everyone? That's why you people were not getting the answer. Okay. 0.625. Guys, in the data I wrote 2.5 in haste. It is 25%. And this will come out as one. You will get the answer as 3.125. Okay. Fine. Now I'm erasing. I'm doing other parts. They are asking you delta D. Delta D will be 1 upon CD plus RR plus ED into delta MB. 1 upon CD plus RR plus ED, we have already calculated, it is 2.5. Delta MB is 1 lakh and positive. So 2,50,000 is the change in deposit. Fine. Now they are saying currency holding, that means delta C, then they want us to find out delta C. Noted? Okay, I am erasing this. So delta C is currency multiplier into change in monetary base, delta MB. And what is currency multiplier? It is CD upon CD plus RR plus ED into delta MB. That is 0.25 upon 0.25 plus 0.05 plus 0.1 into 1 lakh. On solving, you will get it as 62,500. Noted. Changes in deposit currency. Money stock. That means delta M or monetary supply. Money supply you need to calculate. Change in money supply. So we know the direct formula of change in money supply. Yes or no? Money supply is equal to deposit plus currency. So change in money supply is equal to delta MS is equal to delta D plus delta C. Change in deposit plus change in currency. And delta D was 2,50,000. Delta C was 62,500. So it will be 3,12,500. That's your change in MS. Understood? Please note it. Note it. One more question, then we will do. Let me know when you are done. Done, everyone? Simran, Sakshi. Next question. It is a banking system. Do it. Yes, guys. Fine, Sakshi. Good. So see guys, I am going to write what all is given to us. RR is given to us as 15%, that is 0.15. 5% of every deposit. So this is ER, excess deposit reserve ratio, 0.5, 0.05. Then they are saying there is no holdings of cash. That means currency, and cash means currency. So currency to deposit ratio is 0. Open market purchase, if there is purchase, so money is transferred to the government. That means money is there in the economy. So your monetary base is going to increase by this much. How much? 5 lakh. Delta MB will be positive 5 lakh. Now they are asking what will be the total deposit, effect on total deposit. Pay attention, effect. That means they are asking change in deposit from you. And we all know change in deposit will be 1 upon CD plus RR plus ER or ED into delta MB. CD is 0, RR is 0.15 and ER is 0.05. Change in monetary base is 5 lakh. Solve it, you will get it as positive 2,50,000. That means deposit is going to increase by, total deposit is going to increase by 2,50,000. Understood? Please note it. Let me know when you are done. Done? Fine. Next is guys, pay attention. Now let's talk about money supply equation. We have already done it, but I want to expound it a bit more. So what is money supply equation? Yes, guys, what is money supply equation? One zero more, sir. What are you saying? Oh, thank you, Sakshi. So money supply equation. What is money supply equation? No, I'm talking about equation. This is your money supply equation. We have already done it. Okay. So what does money supply equation tells us? So you can write down, it indicates how much money is created in the economy, how much money is created in the economy for a given monetary base. How much money is created in the economy for a given monetary base. So pay attention, guys. This is the multiplier, right? This is monetary base. So for a given monetary base, if the multiplier is multiplied with it, what happens? The monetary base is going to increase, yes or no? And this is money supply, that is money in the economy. So for a given monetary base, how much money is created in the economy? That's what money supply equation tells us. Understood? Right? For a given monetary base, how much money is created in the economy. Okay. And from this equation, we can also derive the determinants of money supply. So major determinants of money supply. What all things determine the money supply? First is monetary base, MB. See, direct relation. Then cash to deposit ratio. Then required reserve. Then ED. Clear, everyone? These are the determinants of money supply. Tell me. Yes or no? Online. Now, guys, I want you to tell me about each and every determinant individually, that which determinant is controlled by which agency, by whom. So if I talk about monetary base, then can you tell me who determines the monetary base in the country? Or can you tell me that the value of monetary base is controlled by which entity in an economy? No? What? So pay attention, monetary base is determined by RBI. What about RR? Who determines the RR? RR is also determined by RBI. What about CD, currency to deposit ratio? Who determines this? Currency to deposit ratio. Who determines it? Tell? The public. Consumers of money, public. And what about ED? Who determines ED? Commercial banks. Yes. ED is totally under commercial banks, how much they want to keep. Noted. Done, everyone? Jyotika, Simran. Now let's talk about one by one. RBI, you can call it in general as central bank, right? So first we are going to talk about central bank determinants of money supply. Central bank determinants of money supply. First is your monetary base, MB or M. Write down, the RBI can increase or decrease monetary base. The RBI can increase or decrease the monetary base. Okay. You tell me, how can RBI increase or decrease monetary base? How can RBI increase or decrease monetary base, guys?
Sir, through open market transaction or
Very
purchase
good.
and sale.
Very good. Very good. Write down, by open market purchase or sale. Yes or no? I told you in the last lecture. Here also, in this lecture also, we solved numericals on it. So either by selling to the government or purchasing from the government. That's what open market sale and purchase is. Anyway, the RBI can increase or decrease the monetary base. Yeah, good, Sakshi Jyotika. By open market purchase or sale. Full stop. And an increase in monetary base. An increase in monetary base leads to increase in money supply. An increase in monetary base leads to increase in money supply, and decrease in monetary base decreases money supply. So what am I saying? Pay attention. MS is directly proportional to MB. Positive relation, yeah? Look at the equation. Direct relation of MS and MB. Positive relation. So if you are increasing the monetary base, money supply will increase. If you are decreasing the monetary base, money supply will decrease. Understood? Clear, everyone? Yes or no? Noted? Okay, next is RR. required reserve ratio. So write down in it, RBI can change the money supply. RBI can change the money supply and money multiplier. What is money multiplier? We already know, yeah? CD plus 1 upon CD plus RR plus CD. So this entire thing will change. RBI can change the money supply and money multiplier by changing the required reserve ratio. Yes or no, guys? So what is money multiplier? CD plus 1 upon CD plus RR plus CD. So if RR is changed, this entire money multiplier will change. And if this will change, this is equal to MS. That means MS or money supply will change. So RBI can change entire money supply by changing the RR. Full stop. An increase in RR, what will happen to the money supply if RR is increased? Guys, everyone, what will happen to the money supply if RR is increased?
फिर डिक्रीज हो जाएगी.
Yes, it will decrease. Good. So an increase in RR decreases the money supply. Obviously, bank is going to hold more money. So less money will be available in the economy. Money supply will reduce. So an increase in RR decreases the money supply by reducing money multiplier. And vice versa. Vice versa means decrease in RR will increase the money supply. Okay. So from here what we can say? That money supply is inversely related to RR or has got negative relation with RR. Understood? Clear? Noted. Next is commercial bank determinants of money supply. Commercial bank determinants of money supply. So what is the commercial bank determinant? Excess reserve ratio. Excess reserve ratio. Write down. Banking system, and when I am saying banking system, guys, I am referring to commercial banks, not the RBI. So write down, banking system helps to determine the money supply. Banking system helps to determine the money supply by changing the excess reserve ratio. By changing the excess reserve ratio. Full stop, write down. Higher excess reserve ratio, reduces the amount of loan. Higher, yes, Sakshi. Good, good. Higher excess reserve ratio reduces the amount of loan, thus reduces the money supply. Thus reduces the money supply. Guys, RR is already there. Now, if banks want to keep excess reserve for the emergencies, then what will happen? Lesser amount of money will be available for lending, yes or no? Bank will be able to lend out smaller quantity of money as loans if bank is keeping higher excess reserve, right? And if lesser money is lended out or is lent out, then what will happen? Lesser money will fluctuate in the market. Lesser fluctuation means lower money supply. Yes or no? Right? And just the opposite, if excess reserve ratio is less, so more money is available to be lent out, and banks can easily lend out higher quantity of money, thereby more money will be there in the market, and hence money supply increases. So write down, on the other hand, on the other hand, lower excess reserve ratio, lower excess reserve ratio increases the money supply in the economy. Increases the money supply in the economy. Understood? Clear, everyone? Online. Please read it. Please go through it. Done? Everyone? Now write down factors that influence excess reserve ratio. Factors that influence excess reserve ratio. Guys, I told you that excess reserve ratio has got indirect relation with money supply. Yes or no? Or we know this. But what are the factors that determine excess reserve ratio? Hmm? Excess reserve ratio is determined by what all things? Let us understand this. So first is market interest rate on loan. Market interest rate on loan. Write down. Okay, write down. Increase in the market rate of interest. Increase in the market rate of interest leads to fall in excess reserve ratio. Leads to fall in excess reserve ratio, and hence it leads to increase in money supply and vice versa, and hence it leads to increase in money supply and vice versa. Did you understand? Sakshi, Simran, Jyotika, everyone? No? Understood or not? Bolo. No. What you did not understand? And Sakshi is not saying anything. Sakshi, I am suspicious. Where are you, Sakshi? Why aren't you opening your mic? You are not back at home, right? Then why aren't you speaking today? Okay. Pay attention. Simran will tell us. Simran, what is market interest rate? What is market interest rate?
So the rate at which banks give loans is the market rate of interest.
Then why didn't you understand? Anyway, let me give you an example. Okay. So SBI, PNB, this is an example for this. And this is you, customer. Okay. Customer. Now, SBI is a commercial bank. Excess reserve ratio is totally in the hands of SBI. It is up to SBI to decide how much excess reserve it wants to keep with itself. It's totally on SBI. So now These commercial banks, their major agenda is to lend out more and more amount of money so that they can earn more and more interest. Yes or no? Because one of the major source of income for commercial banks is the interest that they get, or you can say most prominent source of income is the interest that they get on loans. Yes or no? So higher the amount of loan they lent out, more is the interest they will get. Right or wrong, everyone? Yes or no? Speak. Right.
Yes, sir.
What SBI does is, SBI is very intelligent. SBI is very intelligent. SBI lends out all the money it has got. It does not keep any excess reserve ratio. Let us say, just an example. So it lends out all the money. Lends all the money it has got. Okay. So now SBI lent out all the money. Now what happened? Another customer went to RBI and RBI lent out this money at 20% per annum interest, let us say. Another customer went to SBI and this man asked for 10 lakh, 20 lakh, whatever his deposit was. Urgent or emergency withdrawal. Now what will SBI do? It does not have any excess reserve. Let's say this customer is asking for an hefty amount. It is asking for a hefty amount. So what to do? So SBI will contact PNB and SBI will take, let's say, 20 lakh rupees from PNB. And let's say SBI will pay 10% interest on it. So SBI lent out 20 lakh rupees at 20% interest and SBI borrowed 20 lakh rupees at 10% interest, and with this money it paid this customer. So what is SBI doing? Took the money at 10%, gave it at 20%, earning 10% profit. Yes or no? It is earning 10% profit. Understood or not?
Yes, sir.
Right? So that's what I'm saying. Higher this market rate of interest, more encouragement it will be for commercial banks to reduce their excess reserve and lend out all the money. And if emergency arises, they can borrow from some other bank at lower rate of interest. Got it or not, everyone? Clear? Okay. Second point. Risk of withdrawal emergencies. It is also called as risk of deposit withdrawals. What is the meaning of it? Guys, suppose SBI is located in some city A, and now in that city some pandemic spread out, just like COVID. So now SBI knows that more and more people will turn to bank for the withdrawals. Yes or no? In comparison to normal situation, more people will turn due to this emergency, due to any calamity. Yes, right? Or due to any such situation. Yeah, Sakshi, that's what I am saying. Okay, right, good. So more and more people, higher influx of people will be there for withdrawal. You are talking about bank run. Yeah, bank run can also be the case. Okay. Some rumor spreads out that SBI is running away with all your money. So whatever the scene, if any such emergency happens or occurs, more people go to bank for withdrawals. And when such emergency arises, obviously the bank, commercial bank, is also the part of the society. Bankers are also living in the society. They are also aware of this fact. Yes or no? So they will keep excess reserve. They will increase the excess reserve ratio. Understood or not? And if they will increase excess reserve ratio, what will happen? Money supply will decrease. Clear? Everyone, note it. Next is interest on borrowed reserves. Interest on borrowed reserves. Write down. When the interest rate paid on borrowed reserves increases, when the interest rate paid on borrowed reserve increases, excess reserve ratio increases. Excess reserve ratio increases and it leads to fall in money supply. Leads to fall in money supply. Clear? What is the meaning, guys? Pay attention. Leads to fall in money supply. Pay attention. Now, what this PNB says is, PNB says, you are too intelligent. You are fooling me. You are making profit out of my money. So PNB says, wait now. PNB says, listen, I will give you the money, but now I want 25%. Earlier I was charging you 10%. Now I want 25% interest on the money or reserves that I am lending out to you. Now it is a non-profitable or loss-making transaction for SBI because it is lending out at 20% and it has to borrow at 25%. Yes or no? So the interest on borrowed money has increased. So what will SBI say? SBI will say, listen bro. SBI will say, Don't give me your money. I don't want. Rather, SBI will increase its excess reserve. It will increase the excess reserve ratio. And when SBI will increase excess reserve ratio, money supply will fall. Understood? Please go through it. Yes, madam. Ask. On emergency when money supply decrease. Emergency, money supply would decrease. What? Who is saying it will be advantageous for people? What are Jyotika, it is my humble request to you. Please try to elaborate your questions. You write in a very short manner, and there are some anyway. So please elaborate. It is not understandable to you. Huh? The doubt that not understandable to me, not okay. So you please try to elaborate your question. See, I am not able to make out any logical or valid point out of your question. You are saying that on emergency, that means in emergency, when money supply is decreasing. So I think you are referring to the point that certain second point you are talking about. You are talking about this point, risk of withdrawal emergencies. So if there is risk of withdrawal emergency, then obviously SBI or any commercial bank will increase its excess reserve ratio. And when such a thing will happen, then money supply is going to decrease. We all know. Now from here, I don't know what concept you are applying. You are relating it to what? You are saying would how would be a advantage for people to purchase what? And how come you are referring to advantage of people? I am talking about money supply. You are talking about advantage of people. How are they interrelated? And what is purchase? People are purchasing what? Please specify. Uh, Jyotika, decreased money supply can be related with tight money policy. When tight money policy is prevalent in the society, it what happens in that case, rates of goods and services, they will decline, or if they will not decline, at least inflation will wash out of the market. That's the reason to counter inflation, tight money policy is applied by the central bank, right? So if ER is increasing, then money supply is going to contract. If money supply is going to contract, that means tight money or hard money policy will be prevalent. So it won't be easier to acquire loans and all. That means people won't have that much money. People won't have that much money. So what will happen? Selling of goods and services will decline. And when selling of goods and service will decline, then the rates that were inflated earlier, those inflated rates will deflate. Deflation will occur. Understood? Is there anything else? Have I answered your question correctly, or was there anything else to it? Anyway, third is public determinant of money supply. Jyotika, these things were there in case when Corona was, during the time period of Corona, this emergency thing was happening. Everyone or most of the people were relying on their deposits, demand deposits, their savings. Did you see it? It was there was hardly any inflation at that time. We were advancing towards deflation. Growth rate became negative. Next is public determinant of money supply. How public determines the money supply? By CD, currency to deposit ratio. It is on the people to decide that how much currency they want to keep, or in simple words, how much cash they want to keep and how much money they want to deposit in bank. It is totally up to the people. So write down, public helps to determine money supply with currency held by them. With currency held by them. In bracket, you can write currency to deposit ratio. Bracket, you can write currency to deposit ratio. Next point. If people want to hold more cash, then what will happen to cash to deposit ratio, guys? If people want to hold more cash, what will happen to cash to deposit ratio? Increase. Very good. CD will increase. So if people want to hold more cash, then desired currency ratio will increase. Desired currency ratio will increase. Full stop. This will reduce the money multiplier. This will reduce the money multiplier and lead to reduction in money supply. Again, the old formula. Yeah. This will reduce the money multiplier, and lead to reduction in money supply. Now the factors that influence CD. Number one, number one, wait, Sakshi. Number one, interest on checkable deposit. Your point is also correct, but it will come lower in the hierarchy. Okay, first let's talk about objective points. These things, proximity and all to the bank are subjective. Anyway, number one, interest on checkable deposit. What do you mean by checkable? Sakshi, checkable. What is checkable deposit? Yeah, very good. Good, Sakshi. Your money deposited in bank, your bank account, yeah, which you can withdraw with the help of check. That's what checkable deposit is. Yes or no? So if you are getting higher amount of interest on your deposits in bank, what will you do? You will keep lesser amount of cash with you. You will deposit more and more money in banks. Yes or no? Right? So rise in this interest, rise in the interest on checkable deposit reduces CD. Yes or no? And reduction in CD increases money supply. Understood or not? Clear? Speak up, guys. Second point, fees on checkable deposits. Okay, if your banks go mad and they start charging you for each and everything which they have started, every day you get a message, 50 rupees debited from your account because you withdrew extra amount, 100 rupees for this service, 200 rupees debited for that service. They start taking excess fees. They start taking or charging fees for each and every service they are providing, for checkbook, for for ATM, everything. Huh? They start putting limits. They start extracting more and more fees from you. What will you do? You will say, go to hell, I'm not going to deposit. Yes or no? Yeah. If they start taking excess fees from you, you won't deposit your money in the bank. Yes or no, Sakshi? Or will you deposit? Huh? Right. Sakshi will say, "Arey, come on, take it, take it." Yes, sir, will still. I told you, she will deposit. Why, Sakshi? You love banks or what? Or it's for the greater good. अच्छा, you take that money from dad. अच्छा, तो दर्द नहीं होएगा, है? पैसा जाएगा तो दर्द नहीं होगा जो पापा दे. अच्छा, he compensates you. You mean he compensates you? Compensation is there. Okay, okay, I got it. Okay, so higher the fees, people will keep more currency or more cash. That means CD will increase, and that means MS will decrease. Clear? And vice versa also. Right? Sakshi, want to say something? Okay, fine. Next is income. Guys, it has been observed, it's the data thing. After observing the data, because you can say that how is it so? But it is observed by studying the data, it has been observed. For several years, data was collected and studied, and it has been observed that when income of the people increase, they deposit more and more money in banks. Might be they are under threat that some burglar may turn into their house and may steal the money, or whatever the reason might be. But as we don't know the reason for certain that why this happens, but we know on the basis of data that this happens, that as income increases, people keep less money with themselves, so CD decreases. That means MS increases. Clear? Right? Next is probability of bank run. The point that Sakshi was mentioning, that if there is a rumor, what is a bank run? There is a rumor that suppose ICICI Bank has gone bankrupt. So what will happen? All the depositors will turn to bank at the same time simultaneously, and they will start asking for their money. And we all know that how till now, whatever we studied, we know that bank lends out the money that we deposit in bank. So no bank in entire world can provide all its depositors with their deposits at the same time. Yes or no? If all depositors go to the bank at the same time, bank won't have that much fund to give it to them. Understood or not? So that's the situation of bank run. So probability of bank run, that bank is going bankrupt, so go and withdraw. So if such probability is there, then then people will obviously keep more cash with themselves, CD will increase and MS will decrease. Next point, illegal activities. Guys, if there are illegal activities, more and more illegal activities in the country, then why would illegal money, black money, will deposited in the bank? Yes or no? Black money will be kept in the vaults back at home, not in the bank. So this will lead to rise in CD and decline in MS. Understood? Everyone? Clear or not? Okay, guys, I hope you all understood everything and enjoyed the class. Tomorrow we are going to talk about money supply curve, endogenous and exogenous money supply and their curve. Okay, so we'll see you tomorrow. Thank you. Take care. Bye bye. Good afternoon, dear. Bye.